Turkmenistan, rich in gas, poor in reform. Despite vast natural gas reserves, Turkmenistan remains a highly closed economy with strict state control and minimal foreign investment. Reliant on gas exports to China, Russia, and Iran, its lack of economic diversification makes it vulnerable to market shifts. While the government discusses modernization, tourism, manufacturing, and finance reforms remain limited. Turkmenistan has the potential to strengthen its economy but must open up to global markets. Oman, balancing tradition and progress. Oman stands out in the Gulf region by prioritizing gradual, sustainable development over rapid urbanization. While historically reliant on oil and gas, it is diversifying through tourism, logistics, and fisheries. The Vision 2040 plan aims to boost infrastructure, education, and technology for a more resilient economy. However, challenges like budget deficits, limited oil reserves, and the need for foreign investment remain. Successful reforms could position Oman as a stable, diversified economy in the Middle East. Kuwait, a small giant with big challenges. Due to its vast oil reserves, Kuwait, one of the wealthiest Middle Eastern nations, offers strong welfare benefits, including free education and healthcare. However, like other Gulf states, it faces challenges diversifying its economy. Despite a strong banking sector and investment fund, political gridlock and slow reforms have hindered progress. Kuwait must overcome bureaucratic hurdles and expand into non-oil industries like renewable energy, technology, and logistics to sustain its wealth and regional influence. Uzbekistan, a Central Asian awakening. Uzbekistan, once a Soviet republic with a state-controlled economy, has recently undergone major reforms. Economic liberalization has attracted foreign investment, boosting agriculture, textiles, and manufacturing. The government is modernizing industries, privatizing state-owned enterprises, and improving trade relations. With a young workforce and strategic investments in infrastructure and technology, Uzbekistan has the potential to become a regional economic leader, following a trajectory similar to Vietnam's transformation. Qatar, wealth beyond oil. Qatar, one of the world's wealthiest countries per capita, built its wealth on vast natural gas reserves, making it the largest exporter of liquefied natural gas. Beyond energy, Qatar invests heavily in infrastructure, finance, and tourism to diversify its economy. Hosting the 2022 FIFA World Cup boosted its global presence, while efforts continue to expand its financial sector and develop a knowledge-based economy. Its future depends on balancing energy dominance with technology, sports, and tourism growth. Iraq, rebuilding for the future. Iraq holds one of the world's largest proven oil reserves, but decades of war, sanctions, and political instability have hindered economic growth. Once a regional power, its economy collapsed due to conflict, corruption, and mismanagement. While oil remains the primary revenue source, outdated infrastructure, security threats, and import dependence limit its potential. The government invests in energy diversification, agriculture, and construction, aiming for economic revival. Kazakhstan, the Central Asian power. Kazakhstan, the largest economy in Central Asia, is rich in oil, gas, and minerals, which have long driven its growth. The country has recently moved beyond resource extraction, attracting foreign investment in mining, agriculture, logistics, and manufacturing. With vast land and a favorable climate, Kazakhstan has strong agricultural potential, exporting wheat, livestock, and processed food. The government is also investing in infrastructure, digital transformation, and renewable energy to reduce reliance on oil and gas. Its strategic location along China's Belt and Road Initiative positions Kazakhstan as a key transit hub between Europe and Asia. By modernizing transportation networks and boosting trade, the country is set to become a leading economic force in the region. Hong Kong, the financial gateway. Hong Kong has long been a global financial hub, serving as a key gateway between China and the world. Its strong banking sector, low taxes, and strategic location have attracted multinational corporations and investors, cementing its status as a major economic center. However, recent political shifts, social unrest, and China's growing influence have introduced uncertainty. Competition from emerging financial hubs and global economic shifts further challenge its position. Despite these hurdles, Hong Kong remains a financial powerhouse with a robust stock exchange and strong trade ties. Its future depends on balancing relations with China while maintaining investor confidence and market stability. Iran, sanctions and resilience. Iran has one of the largest economies in the Middle East, with vast oil and gas reserves. Historically, it was a major player in global trade, but international sanctions have severely impacted its economy in recent decades. Despite the challenges, Iran has a strong industrial base, a well-educated population, and potential in the petrochemicals, technology, and tourism sectors. Iran could quickly reintegrate into the global economy if sanctions are lifted or reduced. Malaysia, a balanced economy. Malaysia has built a diverse economy based on manufacturing, oil and gas, and services. With a well-developed infrastructure and a business-friendly environment, it has attracted foreign investment from major companies. However, Malaysia faces challenges such as brain drain, political uncertainty, and competition from neighboring countries. To stay competitive, the government focuses on digital transformation, renewable energy, and high-tech industries. Malaysia's future success will depend on its ability to adapt to global economic shifts while maintaining its competitive advantages in trade and industry. Thailand, more than just tourism. Thailand is one of Southeast Asia's most dynamic economies, known for its tourism, manufacturing, and agriculture. The country has successfully positioned itself as a major tourist destination while developing a strong automotive and electronics manufacturing sector. However, Thailand faces political instability, reliance on low-cost labor, and income inequality. The government is now focusing on transitioning to a more technology-driven economy through initiatives like Thailand 4.0, which aims to promote innovation and automation. If Thailand successfully modernizes its economy while maintaining its strong tourism sector, it has the potential to continue its upward trajectory. Israel, the startup nation. Israel is often called the startup nation due to its incredible innovation ecosystem. Despite being a small country with geopolitical challenges, Israel has built a thriving economy based on technology, cybersecurity, and entrepreneurship. With the world's highest number of startups per capita, Israel is home to cutting-edge advancements in AI, medical technology, and defense industries. Companies like Mobileye, Waze, and Checkpoint Software have become global field leaders. Israel's biggest challenge remains political instability and regional conflicts. However, its focus on innovation, education, and high-tech industries ensures it will remain a major player in the global economy. Singapore, the small nation that became a giant. Singapore is a perfect example of how a country with few natural resources can become an economic powerhouse through smart policies and strategic leadership. Once a struggling British colony, Singapore rapidly industrialized under the leadership of Lee Kuan Yew, focusing on trade, finance, and technology. Today, Singapore is one of the richest nations in the world, known for its financial sector, advanced infrastructure, and high-tech industries. Its business-friendly environment attracts multinational companies, making it a global financial hub. Singapore invests heavily in AI, biotech, and green technologies to remain competitive. Despite its small size, the country's strategic planning ensures it will remain an economic leader for years. Vietnam, the next manufacturing hub. Vietnam's economic transformation over the past few decades has been extraordinary. After the devastation of the Vietnam War, the country struggled with poverty and an inefficient communist economy. However, economic reforms in the 1980s opened the country to foreign investment, unleashing a wave of industrialization. Today, Vietnam is one of the world's leading manufacturing hubs, particularly electronics and textiles. Companies like Samsung, Nike, and Apple have set up factories in Vietnam, benefiting from its low labor costs and strategic location. Despite its rapid growth, Vietnam still faces corruption, pollution, and infrastructure bottlenecks. However, with continued investment in education, technology, and infrastructure, Vietnam is on track to become one of the strongest economies in Southeast Asia. Philippines, a service-driven economy. The Philippines has long been seen as an underdog in the global economy, often overshadowed by its Southeast Asian neighbors. Historically reliant on agriculture, the country has shifted towards a services-based economy, with business process outsourcing becoming a key growth driver. The Philippines is now one of the world's top outsourcing destinations, with companies relying on Filipino professionals for customer support, IT services, and back-office operations. Remittances from overseas Filipino workers also play a major role in the economy, contributing billions of dollars annually. However, infrastructure gaps, bureaucracy, and political instability have hindered long-term growth. The government is working on improving infrastructure through the Build program and attracting foreign investment in manufacturing and digital industries. If the Philippines successfully leverages its young and talented workforce, it has the potential to be a major economic player in Asia in the coming decades. UAE, from oil to innovation. The United Arab Emirates is one of the most remarkable economic success stories in the Middle East. A few decades ago, it was a desert nation with an economy reliant on fishing and pearl diving. The discovery of oil in the 20th century changed everything, turning the UAE into one of the wealthiest nations in the world. Cities like Dubai and Abu Dhabi rose from the sand, transforming into global business hubs. However, the UAE is not content with being an oil-dependent economy. The country has diversified into tourism, finance, logistics, and technology through strategic investments. Dubai, in particular, has positioned itself as a global city, attracting millions of tourists and businesses due to its tax incentives. World-class infrastructure and luxury lifestyle. Looking ahead, the UAE's Vision 2030 aims to further reduce its reliance on oil by investing in AI, renewable energy, and space exploration. With initiatives like the Mars mission and smart city projects, the UAE is set to remain a leader in innovation and economic diversification. Bangladesh, the rising star. Bangladesh has made incredible progress in recent decades, moving from an underdeveloped nation to one of the fastest-growing economies in Asia. Its textile industry is one of the world's largest, and the country is embracing digital transformation. Challenges include labor rights issues, climate change, and infrastructure needs. However, if Bangladesh continues its economic reforms, it could become a middle-income country within the next decade. Taiwan, the Silicon Island. Taiwan has emerged as a high-tech manufacturing giant, particularly in semiconductors. Taiwan Semiconductor Manufacturing Company is crucial to the global supply chain, producing chips for companies like Apple and Nvidia. Despite geopolitical tensions with China, Taiwan's economy remains strong. The country invests in AI, renewable energy, and biotech to ensure long-term growth. The challenge for Taiwan will be maintaining economic independence while navigating complex international relationships. If it can do so, Taiwan will continue to be a leader in high-tech innovation. Saudi Arabia, beyond oil. Saudi Arabia's economy has long been dominated by oil, making it one of the wealthiest nations in the world. However, as the global economy shifts away from fossil fuels, Saudi Arabia has launched an ambitious economic transformation plan, Vision 2030. This plan focuses on diversifying the economy, investing in tourism, entertainment, and technology. The country is developing futuristic megaprojects like NEOM, a smart city powered by renewable energy. Challenges remain, including economic dependence on government spending and slow progress in social reforms. However, if Saudi Arabia successfully transitions into a more diversified economy, it will maintain its status as a leading global economic player. Türkiye, a bridge between continents. Turkey's economy is unique due to its geographic position, straddling both Europe and Asia. Historically a major trading hub, Turkey industrialized rapidly in the late 20th century, becoming a leader in textiles, automotive manufacturing, and tourism. However, Turkey has faced economic instability recently, with inflation, currency fluctuations, and political uncertainty impacting investor confidence. The country also has a high debt burden and economic dependence on external funding. Despite these challenges, Turkey has significant growth potential. Its young workforce, strong manufacturing base, and strategic location make it a key player in global trade. If it can stabilize its economy and attract foreign investment, Turkey can reclaim its position as a regional economic powerhouse. Indonesia, Southeast Asia's sleeping giant. Indonesia is the largest economy in Southeast Asia, and its economic potential is massive. With abundant natural resources and a young, growing population, Indonesia has transitioned from an agriculture-based economy to a manufacturing and services-driven one. Historically reliant on oil, gas, and palm oil exports, Indonesia now focuses on digital transformation. E-commerce, fintech, and ride-hailing services have boomed recently, with startups like Gojek and Tokopedia leading the way. However, Indonesia faces challenges like corruption, inadequate infrastructure, and regional economic disparities. The government's long-term goal is to develop new industrial sectors, improve education, and attract foreign investment. If successful, Indonesia could become a top 10 global economy by 2050. South Korea, from war-torn to tech titan. South Korea's rise is nothing short of remarkable. In the 1950s, it was one of the poorest countries post-Korean War. It became a global technology, shipbuilding, and entertainment leader through strategic industrial policies. South Korea is home to Samsung, Hyundai, and K-pop and has a strong digital economy. However, economic concentration in chaebols, a declining birth rate and a high-pressure work culture pose challenges. South Korea focuses on AI, biotech and green technology to sustain growth. If it successfully balances innovation with social reforms, it will continue being a global economic force. Japan, the innovation powerhouse. Few nations have reinvented themselves as Japan has. After World War II, it was devastated, but through sheer resilience and innovation, it became an economic powerhouse by the 1980s, dominating the automotive and electronics industries. However, the 1990s brought the lost decades of stagnation due to an asset bubble collapse. While Japan remains a tech leader, with companies like Sony, Toyota, and SoftBank, its challenges include an aging population and low productivity growth. The future lies in automation, robotics, and renewable energy. Japan's ability to adapt, as seen in its investments in AI and smart cities, will determine whether it can maintain its global economic influence. India, the sleeping giant awakens. India has always been a land of trade and wealth, from the ancient spice routes to its thriving textile industry under the Mughal Empire. However, British colonization drained its resources, and post-independence socialism slowed growth. The 1991 economic liberalization changed everything. India embraced globalization, which led to a boom in IT, pharmaceuticals, and outsourcing. Today, India is the world's fastest growing major economy, with a thriving startup scene, strong tech exports and a young, ambitious workforce. However, challenges remain: inadequate infrastructure, bureaucratic hurdles, and wealth inequality. If India can navigate these, its future is promising, likely to become the third largest economy, driven by digital innovation, renewable energy, and a rising middle class. With its massive population and rapid urbanization, India has the potential to become the third largest economy within the next decade. The key will be balancing economic growth with social development. China, the giant that reshaped the world. China's economic story is one of the most dramatic transformations in modern history. For centuries, it was a wealthy empire known for its silk, porcelain, and advanced civilization. However, the 19th and early 20th centuries were marked by war, foreign invasions, and internal strife, which left China struggling. Everything changed in 1978 when Deng Xiaoping introduced market reforms. China transitioned from a planned economy to a mixed economy, embracing private enterprise while maintaining government control. This shift unleashed rapid industrialization and urbanization, turning China into the world's factory. Cities like Shenzhen went from fishing villages to global tech hubs in decades. Today, China is the second largest manufacturing, AI, and e-commerce economy. However, it faces rising challenges: aging demographics, a real estate crisis, geopolitical tensions, and slowing growth. The future will likely see China doubling on technological self-sufficiency, electric vehicles, and digital currency while shifting toward a consumer-driven economy. China will shift toward high-tech industries, AI, automation, and a consumption-driven economy in the future. The government is investing heavily in renewable energy, semiconductor production, and digital currency to solidify its position as a global leader.